Channel once again. Today is a good day and quite sunny as I'm recording this video. Well, like I said, I'm going to be talking about chart patterns and candlestick patterns. Firstly, what are these chart patterns? Chart patterns are display of candles in some certain ways, some certain patterns at which if you understand that patterns, it can be repeated, and when you see it repeated, that is when you capitalize on it. For instance, we have chart patterns such as head and shoulder. We have the inverse head and shoulder, that is the upside of head and shoulder. We have the double top, double bottom, and so on and so forth. But the most effective chart patterns we have head and shoulder, we have the double bottoms and all that. So the question here is, what are these chart patterns and how can we trade them? How do we identify them? All right, I am on the Euro USD on the daily time frame as we speak. So you should know that you need to master your time frame firstly. You need to know, okay, your time frame is this time frame and this is this time frame that I'm going to use to check the chart patterns to know if the market is about to reverse or not. All right, because there are time frames that I used to know that this market is about to reverse if I see these chart patterns on them. All right, this is the daily time frame, and as you can see right here, put your eyes on this place, put your eyes on this level right here. You would notice that there is a head and shoulder on this level. All right, so now the question is, how do we capitalize on it? Firstly, what is this head and shoulder? Head and shoulder is like this. Look at this level here. We tend to see something like this, go down, back up here again, come back here again, then drops down. This is a typical head and shoulder chart pattern you can see. But mind you, this is just a drawing. It may not look exactly like this. That is the thing you need to understand. It may not look exactly like this, but you just need to understand that once you see something look alike, then you should know that, okay, this is forming a head and shoulder. Two characteristics of a head and shoulder is, firstly, the head is always at this point. The head is always higher than the shoulders. This is the head here, and the shoulder is low key looking at the same level of resistance. For instance, you look at this level right here now, you'll see that, okay, this head is past this shoulder. Take your body, for example. You have your head and you have your shoulder. The level of your shoulder is different from that of your head. All right, that is how you identify the head and shoulder chart pattern. If you look at it right now, you see that this level of resistance is actually there. Then this head as well has its own resistance. So if the market come here, you're expecting the market to drop as well, thereby creating a double top at this level here. All right, so now let's go straight to the point. Now, like I said, this is just the drawing. Let's look at it on the chart. Good enough, we can see one right here. Like I showed you, center your eyes on this level right here. You know that this is a head and shoulder on the daily time frame. So now, how do we make the money from this? How do we trade it? You want to trade the head and shoulder at the precise resistance. Remember, you are trading the head and shoulder on the neckline, on the shoulder level. For instance, this is what I mean. Look at this level right now. You see that there is a resistance here. You need to trade at the shoulder part of the head and shoulder chart pattern. All right. Once the market does all this and you came to the market and you saw that this candle, let me zoom in well enough. Okay, now you've seen that this candle is about to close. Yeah, you've seen that this candle is about to close. Okay, and this candle is actually on that resistance level you've drawn that is corresponding to the previous shoulder. Then your mind should be telling you, okay, it is about time for this market to drop. It is about time for this market to do what? To drop. Okay, now let's start this from here. For instance, you tend to see this market at this level. For instance, you tend to see this market at this level here, right here. All right. Remember, this is not where the market started falling from. But look at something. This market touched this level, all right. Then it fell from here, all the way down to this level. The head and shoulder was still effective. All right, but we had a reversal to the upside, giving us that respect at that resistance level. The market didn't break that place, so you are expecting the market to still fall down as long as it didn't break that shoulder resistance. We had 150 pips right here. Using a very good standard lot, you should know that you're making a lot of money from that. That is 150 pips times, even if you're using $5 per pip or $10 per pip, you should be making about, if I'm not mistaken, $1,500. So that aside, so now, and in order for you to understand how lot size are done, you see a video. The video is going to be, will I tag it here? Yeah, I'm going to tag it here. Lot size and all that. You need to understand the lot size. And as well, I'll be putting another video on the screen at the end of this video where you need to understand the trend line strategy, because the trend line as well works with this head and shoulder well enough. If I see any trend line, I'm going to show you. So let's get straight to the point now. So now, you see this market came down here. There's 150 pips. Then the market started reversing back. The question is, why did this market start dropping, going back up? Look, there is a neckline here as well. There's a support level here as well. It is simple. Look at this place. This market started dropping, came back up. There is no reason for it to go up, but it did. So now it came here, created the first shoulder, dropped down back, went back up again, came down, then created this second shoulder in order to complete the structure, head and shoulder pattern. All right. So now this level has been marked out. Yes. Then this market reversed back up, and now let's say we saw this market at this level. So now your mind is telling you, okay, this is another opportunity for the head and shoulder to drop massively. All right. This is another opportunity for the head and shoulder to drop massively. So now this head and shoulder came here and you enter the market. Okay, let's say you saw this head and shoulder on your precise time frame. Maybe you saw it on the 1 hour time frame or on the daily time frame or the 4 hour time frame. Depends on you. All right. So right now I'm using this daily time frame to make an example. Today I saw this head and shoulder as well, and I banked quite some cash with it. I saw it on the 1 hour time frame. I'm going to show you that as well. But let's continue this one right here. So now I saw this market right here and I brought my short too. But before you bring your short too, you need to bring out your confluence. You need to check out the reason why you're taking that trade. Not just because of you saw an head and shoulder, you're going to enter the trade. You need to derive some confluences. Check out your trend line. Check out your Fibonacci. Check out any other thing. Check out your CSP and all that. Multi-Tech Academy students, you know what to talk about. So now, once you've gotten your confluence and you've gotten a good reason for taking that trade, then you bring out your short too, and immediately the candle closes, you look for that level of resistance. Then you place your stop loss above the resistance level. All right. Then you put your target. You set your target at, if you don't want any hesitation, if you don't want any, for instance, where I get this a lot, where do I put my take profit? Listen, there are two things here. It's either you swing the trade or you day trade. If you day trading, then you don't want anything like reversal. All right, you don't want anything like reversal, so you're going to put it at the most closest support level. For instance, this is what I mean. This is the closest support level here, so your target is just going to be here, from here to here, closing about 82 pips. This is the daily time frame. Remember, this is the daily time frame. You can do this on your time frame. You can do it on the 15 minutes time frame, on the 10 minutes time frame, on the 5 minutes time frame, on the, but if you're a Multi-Tech Academy student, please stick to the time frames that I've taught you guys. All right, this is the daily time frame right now, and we saw this chart pattern right here and we entered it. Remember, this market went up here, then tested this level of resistance again and started dropping. Remember what I said, your target is two things. Do you want to day trade or do you want to swing it? If you want to day trade, then you don't need any form of reversal, so you just have to put it on the closest support level that has the potential of reversing the market. All right, so now you put it here and you secured 82 pips. Good for you. This is a risk to reward ratio of about 48 pips to 82 pips. It is not up to 2. All right, but it is a good risk to reward. It doesn't matter if it is a 1-to-1 or all that. As long as you have a good setup, a good confluence, you have the right to take the trade regardless of the risk to reward ratio. All right, in order for you to determine a better good take profit, you bring in your Fibonacci too. All right, let's check if the Fibonacci corresponds with this level here. Fibonacci is going to act as part of our confluence. So we bring up our Fibonacci retracement tool, then we drag it from the recent high to the recent low right here, then we'll drag it to this level. Ladies and gentlemen, can you see that the Fibonacci corresponded well enough on the shoulder resistance level? So now the Fibonacci is telling you, in order for you to use this Fibonacci well, I have a video on this channel. Go to check out how to use the Fibonacci. You would learn there, and when you watch it, watch how I made 10K on this channel. Watch how I made 10K on this channel with gold. You would learn the setup, how I set up my own Fibonacci as well. It is very easy. Most of you guys have asked me, how do I set up my Fibonacci? Watch how I made 10K. You would see the settings there. Then you go ahead to watch how to use the Fibonacci tool. So now I drew it from the beginning of the beginning of the impulsive move to the beginning of the retracement level. So the market lapped on the 618 area. So now in order for me to determine my take profit, I just need to put it at the 100% retracement or at the 27 area. All right, it is simple. You put it at this level or the 27 area. Let me drag it down to this level. This is where the market closed, and I put my resistance above structure right there, covering about 48 pips. All right, then I want to follow the Fibonacci take profit target. I have two take profit right here, but to be precise, it depends on you anyway. If you want to put your resistance, if you want to put your take profit target, like I said, if you want to day trade, you don't want any form of reversal, any potential reversal, then your first level target should be right here. Your first level target should be right here, with thereby giving you 80 pips. Then your second level target, if you want to follow the Fibonacci take profit extension, is the second level is this 100% retracement here. All right. Then your third level is going to be this 27 area. If you want to understand more, the link is going to be in the description. Come register right now and let's go more in details. All right, that is just how we do it. So you set your take profit target at this level and you can see it simple and short. Let's use the replay tool. Let's see if it's going to work. All right, let's see, you enter this market at this level right here now, and the market is about to give you that profit. All right, so let's go back up. Let's zoom out. I don't know if this market is going to zoom out. I don't know. The thing is quite funny. All right, it is zoomed out. So now, let's say you've entered this market already and you see that, okay, this market is about to give me good profit. So now I've entered. Let me see if I'm going to get good profit on it. So let's start playing. You see the market drop and whoop. Simple as that. Did you see it? The market went down, simple as that. We got our TP slammed. Immediately we entered the market. We didn't waste much time. All right, let me reduce the speed so you can see what I mean. The market started dropping. You can see we started having the market pushed up first, then first TP slammed, a break and retest happened, the 100% retracement has been slammed, and the third take profit has been slammed. That is how you use your what? Head and shoulder. It is simple, bro. It is very simple. So now the head and shoulder has been explained well enough. So now this is the 1 day time frame. Then I used it on the 1 hour time frame. Today, as I'm recording this video, this is Wednesday or this is Thursday. All right, this is Thursday. I used it at 9 a.m. So if you're on my WhatsApp, you would see some profit that I posted and all that. So now that is how effective the head and shoulder is. First thing first, you need to understand the structure of the head and shoulder, number one. Number two, you need to mark out the neckline because it is the neckline that you would capitalize on. All right. Then number three is you need to know where your take profit target is going to be. That is where you employ the Fibonacci tool. Or if you don't want any form of retracement, then you use the first level target support there. All right. But if you want to use the Fibonacci, you have to just put it at the 0.27 area. All right. Remember, before you take any trade, have your confluence. At least Multi-Tech Academy students, you know what I mean. All right. That is it. That is it. So now let's go to the 1 hour time frame. Yeah, I'm done with this. So let's go to the 1 hour time frame. Let me show you guys something that happened here again using the same head and shoulder trick. Use the same head and shoulder chart pattern, not trick. The same head and shoulder. Let's go there to the 1 hour time frame. Then I'm going to call it a wrap. All right, look at it right here. Look at it right here. You would see that this is another form of head and shoulder. Like I told you guys, the head and shoulder, the chart pattern can form on any time frame depending on what you believe in. It can form in any time frame, my brother. So now look at this thing. We got this head, we got the shoulder. I said capitalize on either the head or capitalize on the shoulder level. So you just have to mark out your resistance level at the shoulder level. Then if you want to use the Fibonacci retracement, if it works for you, good enough. If it doesn't work, good enough. So now we got the level. So here I got the level at this point and I was like, okay, yes, I am going to capitalize on it. So I saw this candle closing at this level here. So what I just did is, okay, this is a head and shoulder. I derived my confluences and I brought my 2 and I placed it here, setting my stop loss above this level. I think I got a stop loss of 15 pips. I don't know. But the stop loss was quite great. Then I set my TP here. And you can, the TP was about 35 pips or so. Yeah, the TP was about 35 pips because I set it at the 100% retracement level. All right. So, and here you can see that this is a very good risk to reward ratio. 15 pips stop loss, and I had a 15 pips stop loss level and a 35 pips take profit. That is 2 point something risk to reward. And yeah, the cash was quite great. So that is very easy to understand. Remember, we got the head and shoulder, and inside the head and shoulder, we got a double top as well. This is the double top right here. This is the first top. This is the level. Double top right here, including the head and shoulder. So that's enough confluences for me to take that trade. And yeah, we took the trade, and it was a good move. Zero drawdown. You can see that no drawdown at all. The market went straight in profit. One candle did the trick. So I hope this video is super beneficial to you, and I hope you understand it. Ask questions in the comment section if you have any. Then if you want to join the Multitech Academy students, then the link is going to be in the description. Chat me up on WhatsApp or on Instagram. Every link is going to be there. And if you want to use the preferred broker that we use, XNES, is highly recommended. So you want to get along, let's make this money together, right? Best got you, and I'll see you guys in the next video. Do not forget, subscribe and watch the remaining 2 videos that I'm going to put on the screen so you don't miss out. Wish you a profitable week. Well, today's Thursday, so the week is running out. So Pest got you, and woba!